saying the fourth quarter is expected to remain challenging. Okay, let's move on now. Let's just ponder what we are going to be talking to you about next, and that is, of course, the general theme on equity markets. We are expecting, if anything, some continued selling pressure. George Lucas is with me to the moment from Instreet. George, the European headwinds, a factor you can't deny. How are you reading that situation having evolved over the weekend?
I think, well, the weekend was pretty quiet, and so there was not much news out on Europe. I think the price action that we're seeing in the markets is not unexpected, and it's actually a very similar price action to what we saw after the big US bailouts in 2008, where the markets initially react positive and then come off a bit. The Australian market was kind of keyed for a 10% correction maybe 4 weeks ago, and I think the mining tax, what's happening in Europe, the Goldman Sachs, all those issues basically started with a catalyst for the 10% correction. We've seen in the 10% correction now, it's not unusual to have 10% corrections in bull markets, but, you know, Europe is still a big concern.
What does it take to translate then from that bull market correction into bear market phase? What line do you have to cross? You talk about a 10% correction.
It's more, well, the line that they look for crossing is 20%. And that's when people will officially come out and state that it's a bear market. But what we have to see is more of a change in mentality in participants and a continually selling down of the Australian equities. At the moment, you know, in reality, we had a bounce last week. There wasn't a sell down. I mean, the market didn't bounce. You know, it was a bit of a dead cat bounce. But it looks like the market is trying to find a bottom at this 10% level down. The earnings data is still pretty good, not only here but overseas. And so there's still, you know, fundamental support for the market.
And so who's really acting as the key selling drivers? Is it the fund management component to this market? Charlie Aiken was saying they weren't just shorting the mining space, they were going across sectors in a kind of an unwarranted fashion. Do you buy that?
Yeah, and that was mainly from the offshore fund managers. Yeah. And I think the Australian fund managers just stepped back when that happened. And also there's really no incentive now for the Australian fund managers to buy until the after June period. And so they're just going to step back from the market, and as the foreigners continue to sell the market, and a lot of it is caused by what's happening in Greece, and a lot of it's caused by our own, you know, political instability at the moment. They'll just keep slamming, you know, selling into the market.
So when is a good time to buy, George? Because if it keeps going, it's like the falling knife. When do you catch hold of it? 10% is one thing, it could go down, what, as much as 18?
Well, it could. But we're not looking for it to go down as much as 18. We're looking...
So what will put the floor on it?
The floor will really be from the price action. You really have to start to see the market and buying begin to come back into the market. And maybe that'll happen next week. This week, I mean, it's in a buy zone. And we believe it's in a buy zone at these levels, but it's really a buy zone, and just stand back and wait and see what happens over the next week or so to see if there's signs that it's stabilising.
Again, though, you're saying that the domestic fund managers don't have an incentive to buy till after June. International fund managers are looking to Europe. That contagion not resolving. So the buy signals are generated by what?
There probably won't be like a good news buy story come out. It'll just be from what happened at the beginning of this year, or just after January. The market just starts slowly creeping back up. You won't actually see a catalyst or a big buy story come out, I don't believe.
All right. Tell me about stimulus globally, how convinced you are that it's doing its job, because how do you define if it is doing its job? Put it that way.
Well, what we're beginning to see globally is that industrial production numbers are picking up, and so we're beginning to see that manufacturing is taking its part in stimulus and is taking its part towards economic growth. And that's how the theory says it should work. You know, initially you see the government coming in and spending, and then we should start seeing a switch from government spending into manufacturing and industry and commerce, and that's what we're beginning to see. And it's not just in the manufacturing industry, it's also in the service industries as well. And we're beginning to see, for example, retail sales pick up in the US, for example. So we're beginning to see this slow movement. And it's not just in the US or in Australia, but it's also in Europe.
Who are the buyers, though, for those manufactured goods coming out of Europe?
Well, a lot of it's inventory rebuilding, and so the inventories were worn down quite a lot, and we're seeing a lot of that come back from inventory rebuilding. Obviously, countries like Germany are very high-end exporters, and they export at the beginning of the manufacturing cycle, and so we've seen those, you know, the economic theory play out the way it should.
We've got a key ZEW confidence survey coming out of Europe this week. Is that inevitably going to have been dented by what's been plaguing Europe? You don't expect those sorts of figures to remain robust, I take it?
No, it is going to be dented. But I think, secretly, European leaders are sitting there quite happy that the euro has been sold down and makes them more competitive in their export markets. And so,
yes, but we've had this discussion before. As you know, George, it's only so good, and restocking's one thing. You still need those buyers at the end. It's all very well to kind of replenish those warehouses, but if the buyers are absent, you're up struggle
and we're
street.
beginning to see those buyers come back in the US, and so that's what the good signs are, that we are actually beginning to see signs that the US consumer is coming back into the market.
As the high dollar affects psychology, how does that affect the US consumer? Does that actually make life easier?
I don't think it really affects the US consumer, but it will begin to affect US corporations who, a US corporation a large US corporation may own 40 to 50% of their earnings offshore, and obviously stronger US dollars will affect their earnings back here.
It's really crimped, though, the crude price, and that does feed into the US consumer, how much they fill up and are minded to get in the SUV to get down to Walmart. Now, if those gasoline prices are cheaper, that has to be good, and that's a high dollar for you.
Yeah, and then we've seen that happen. We've seen the oil prices improve quite a lot.
All right, other themes that we need to look at, and that's China as well in the market. We saw last week some fairly toppy retail sales numbers. You talk about industrial production. That wasn't so rosy. In the round, on balance, how did you read China's numbers? I mean,
they were below expectations, but they're still up there at 18% industrial production. So the economy is still coming out, maybe slightly slower than expectations, but it's still moving out of its recovery pretty quickly. And so, the numbers still look pretty good coming out of China. And what's really happened is that the Chinese currency, Europe is China's largest exporter. So the Chinese currency is kind of like appreciated nearly 5% against this trade-weighted basket on the back of this euro depreciation. And so it's also going to take a lot of internal pressures off China to tighten. And so we may see the banks pull back the reserve requirements of banks. They've been raising them every 2 to 3 weeks, and we may see that slow down in China now. And that also could end up being a positive stimulus internally for Chinese consumers.
Because if anything, that's the debate. How successfully are they switching from that export-oriented approach into domestic spending?
Yeah.
That's, I guess, as you say, that gets renewed vigour on the back of all of that.
Yeah, it begins to help. And it's going to take a lot of pressure. It's going to make it a lot harder for the US to put a convincing story that the Chinese need to appreciate their renminbi against the dollar, when the Chinese are looking at already a 5% appreciation against their trade-weighted basket.
So Tim Geithner, still plenty more shuttling backwards and forwards to do.
Yeah, it's going to cause a little bit of political tension in the US when China, doesn't appreciate their currency.
That one's been playing out, George. It will continue to fester. For now, appreciate it. Have a great week. George Lucas there from Instreet. We're taking a break, of course. The clock's ticking, about 45 minutes left on, and we're underway for a new trading day. Let's look at currencies into the break.